This is the first Real Estate Standard podcast live stream. I'm here with Kenny and Chris. How you guys doing today?
Happy holidays, Tim. Glad to be here.
Happy holidays. Yeah, glad to be here. Not as festive as you are, but hanging in there nonetheless.
Yeah, New York City is ready for the holidays. Obviously, it's all decked out. So I thought I'll take off my jacket, but I'll keep the scarf on. Right? We got the orange tie, but we got to have a little bit of holiday cheer here. Um,
I'm jealous. We're in Southern California, Kenny and I. So, Kenny's got the Hawaiian shirt going, and I got tank tops on when I get out of the office because it's like 83 degrees here today.
it sounds nice. Just decorate a palm tree, as they said in Home Alone, right?
Exactly.
Um, what do you guys think about the first pod that we did? You want to walk everybody through a little bit of the behind the scenes, what's like Instagram versus reality when it comes to podcasting?
It definitely changed my
It was
perspective.
fun.
Yeah, it definitely changed my
Yeah.
perspective. Doing it versus watching is a lot of difference.
Yeah, yeah. I've had a few people that are like, I don't know how that went, but when you kind of see the playback, you're like, oh, it's fine. In fact, it's probably more than fine. And yeah, I know we appreciate the comments and the early feedback from the first episode. It's always, I don't know, probably novel to have something new on the internet. And Kenny, I know you alluded to that toward the end, right? It's like, well, we wanted more of this content, so we're gonna create more of the content and maybe have other people join in along the way as well. So super cool.
Yeah,
Um,
it was cool to just experience it, be a part of it, and again, just kind of push the envelope in a direction or in a topic that that we're excited about and want to dive deeper into. So you think about the initial recording, and rather than call out or share our criticisms from behind the scenes, it's like, oh wow, that wasn't that bad. Everybody kind of found a flow, and there's some good back and forth banter. I think we did a pretty good job of just highlighting all the different areas that there are to explore, from the cash management to the collateral piece to energy consumption, rent payment. I mean, there are so many different little avenues that the real estate community can go explore. And I think that's what the point of this whole thing was in the first place, was to get the conversation started and let people's imaginations run where they will, run wild. So that's what I'm really excited about, is just seeing how this, not only how this is received by the community, but how creative the various participants are with applying it to their holdings, their portfolio, what have you.
Yeah, I think we'll iron out the kinks and we'll get it right. We're gonna start bringing on guests weekly, maybe bi-weekly guests, and get different perspectives, different angles from different professionals in real estate and Bitcoin, and always keep it around real estate and Bitcoin. So um, there's a lot to talk about there. So I don't think we're gonna have any trouble finding guests or coming up with content, um, especially things are moving fast um, with interest rates. We just had a minor rate cut, and it's gonna looks like it might continue through 2026 and even probably through 2027. I think there's the countdown clock is on for the new Fed chair. I think it's like 130 days, something like that. So everyone's going to be keeping a close eye. A lot of real estate guys are going to be looking to refinance. I think they're holding out and looking for the time to strike. So all eyes on the Fed for now.
yeah. What, Chris? I guess is your reaction to the rate cut from the real estate lens, because and Kenny as well. I saw a post that said something like, "This is not this is not Lambo QE. It's more like your Uber is 7 minutes away QE."
Yeah, I didn't see that post, but that's a good description. I mean, I can't say it was a huge surprise. I feel like it had been, telegraphed, ad nauseum, leading up to it. The really the only questions at this point is, is it 25 bips or 50? But I mean, I feel the cat's kind of out of the bag, right? The whole, more and more of the market is aware to the fact that the system can only operate for so long at higher rates without, before you go and, break things and do, irreparable damage. So, yeah, we got up high, but it's only a matter of time before it starts to scale back down. And bringing it back to the real estate community, I mean, Kenny did a good job on the episode about talking about the how important the timing is, and being able to navigate the markets from that perspective. There is a massive backlog of deals across the country, in every single property type, that are holding out as long as they can, for this lower rate environment so that they can do those refis. And one of the big differences, this go around, as compared to, past cycles, is that the banks and the lenders have been working with the borrowers, to a much greater extent than they have in the past. They don't want the buildings back. They learned that lesson in 08, 09. Like, it's just not their core business. They don't have the expertise. They don't have the infrastructure, to operate, some of these assets to the degree that they require. So we've seen it, really at scale, this go around, of how much the lenders are extending and pretending, and is kind of the phrase that we've been using, or that we hear in our world, just to give the borrowers the time they need, get that new lease signed, finish up that TI job, whatever it may be, to get the asset stabilized. And, hopefully we can hold out long enough for, rates to come down a little bit, and, we can get that margin back. So I think 2026, the real estate community is going to be very active, from a couple different dimensions, refi world being, probably the leader.
Any other thoughts on that, Kenny, or you want to jump to the dashboard, or go to a different topic?
Yeah, I'm happy to share my screen and show you, how we're, um, there it is. So we built a dashboard so we can kind of track where we are when it comes to our Bitcoin and real estate holdings. So, the real estate value, we're just using an average cap rate, a modest cap rate there to calculate it. But what we do is we compare, we keep an eye on where we are as far as our Bitcoin holdings and our real estate value. And right now we're about 1.2% Bitcoin and 98.8% real estate. And, we're, looking to, eventually flip that on its head and be 99% Bitcoin, 1% real estate at some point. And we have our kind of goals here on some of these blocks to, at 10%, we would have to have 15 Bitcoin on our balance sheet. At 50%, we'd have 150. You just saw it update right there. So this is all live on our dashboard at westmain.storage. Pretty cool URL with the.
Hey, Kenny, why don't you take a second and explain to the real estate listener here, about your strategy. Like, why do this in the first place? What benefits does, diversifying your reserves, provide to you as a real estate investor?
Yeah, I'd be happy to talk about that. So I think a lot of, we're a mom and pop kind of operator here. We operate some retail shopping centers and self-storage facilities, and a lot of times when we're looking to acquire another property, we don't have enough capital to do so. So we have to, wait until we can either refinance one of our properties, or we have to accumulate enough capital for a down payment. And um, so we normally have cash piles, growing like a lot of operators where they're looking to reinvest that capital. And so Bitcoin, you can buy $1 worth of Bitcoin. You don't have to buy a full Bitcoin. You can buy a fraction of a Bitcoin, and the smallest unit of a Bitcoin is a Satoshi, named after the anonymous founder. And um, a popular method in Bitcoin in general and just investing in general is dollar cost averaging. So what we decided to do is take our cash flow, our free cash flow, and start purchasing Bitcoin with it every week and dollar cost average our cash flow. And the reason is because we don't have there may be like a lack of deal flow. Maybe there's, no opportunities for us to expand, and we're waiting for something to come across our desk. And in the meantime, fiat is a melting ice cube, to borrow a sailor quote. Um, so what can we actually afford, and what else is out there? Um, you can't really buy anything with $10,000. So for us, we allocate it to Bitcoin, and we do that week over week. We've done that. Yesterday was our 20th purchase. So we consider ourselves a Bitcoin operating company, where we're operating a real estate business, self storage, and we convert the cash flow in real time to Bitcoin. And at some point in the future, we may look at our Bitcoin holdings as they grow and borrow against our Bitcoin to buy more real estate. Or when the time makes sense, we borrow against our real estate to buy more Bitcoin. And you can kind of go back and forth, and we're just trying to create a case study here for the other real estate operators to see. Um,
So
so
what you're talking about is, before Bitcoin, right? Before Bitcoin and before you implemented this strategy, you were likely holding your reserves in what, T-bill, short-term T-bills, money market funds for a couple percentage points.
Yeah, I mean, lately, I mean, for a while, just been dispersing the free cash flow, and we were personally investing, as individuals. And something I promised myself to do after, seeing the new administration, the White House administration being so supportive of Bitcoin, was that I was gonna, come out of the shadows where we were kind of Bitcoiners lurking in the shadows, that we were gonna take one of our assets, and West Main Self Storage is our most valuable asset. So we're gonna take our most valuable asset in the family business, and we're gonna dedicate it to the Bitcoin standard. And we're going to, um, you know, be open about that. And instead of dispersing the cash flow, we're going to keep it at the company, and we're going to buy Bitcoin. We're going to put it on the balance sheet. We're going to grow our Bitcoin, and we're going to try to become the most valuable company in the world, or not value in storage. That is, self storage,
Or
because
overall. I love that goal.
yeah, we can overtake Sailor. We can do
I love that energy.
it.
Well, public storage is a viable competitor to overtake. So in the storage world, to say the least. I don't know how many billion they have under management these days, but it's not a small number.
Yeah, extra space, public storage, and then there's some like private REITs. There's like the Prime Group, and they've been successful and raised billions of dollars to go out and acquire self-storage facilities. And the one thing that we have access to, our advantage, is we have unlimited deal flow. That's how we look at Bitcoin, if you don't have to, if you don't have a, you're not forced to make a bad deal, right? We can be picky and choosy, and when when a deal comes that is going to beat the hurdle rate, it's going to beat Bitcoin, we can invest in that deal. We don't have to just, put the capital to work and buy a dog because um, we don't want the money getting stale, getting 3% with T-bills. So
So,
it relieves the pressure of constantly looking for the next acquisition, and these companies call us weekly. Like every week I'm getting a call from whether it's private equity or some self-storage investor that wants to acquire our facilities, and they talk about how much capital they have just sitting there, and I'm just thinking like, well, if they knew about Bitcoin, they could just put that in Bitcoin and they can relax a little. But
so let me just kind of bring some of this full circle. So as far as deciding to use Bitcoin as a reserve asset, a treasury reserve asset, right? That helps you accomplish a couple of things, right? You've described the collateral piece on Monday's call, and now you're talking about how it gives you the ability to be more selective about what deals you're doing, right? Which I love that one, because I think the current market, just the way things are set up today, those incentives are completely upside down, and that's another topic we can dive into. But the ability to be patient and very selective on what assets you acquire and move and spend your time on, I think is incredibly powerful. You can extrapolate this even further by saying, and this is maybe some of these are less relevant to a storage facility specifically, but and some of these are more relevant to a retail center, an office building, a warehouse, what have you, right? I mean, that's one of the really cool things about Bitcoin and commercial real estate, is because CRE is so dynamic and there's so many niches and specialties, in the space. So where some strategies are going to be relevant, they may not be as relevant or necessary in other areas. So other reasons you would add Bitcoin as a treasury reserve asset is, one, you're able to build and maintain reserves for maintenance and capital expenditures, capex projects, or even emergencies, right? So the scenario you described is you are not able to save US dollars fast enough, right, because of the inflationary system that we live in, right? So if there is a surprise maintenance expense or some kind of emergency, whether or not you have the capital on hand to address that is a question mark, right? And when you get into that scenario as a real estate owner with an illiquid asset, that could turn into a really bad situation, very quickly. So having Bitcoin as a reserve asset that's appreciating, call it 50% a year, it's liquid 24/7, 365. It acts as a backstop or as an emergency reserve for some of those situations.
that's another valid use case. Yeah. Um,
So yeah, I wanted to kind of bring that down, kind of make it a little bit more relatable for some of the real estate folks, because again, there's so many different nuances of how it can be used and where it's going to be applicable.
yeah, I think we've touched on how it can be used as a medium of exchange too, as well. It can be a brand enhancement to your business. So if you're looking to stand out from the competition, there's a lot of real estate professionals out there, and if you want an edge, Bitcoin can be that edge for you. So
Yeah,
that's always something.
absolutely. I mean, and it's if you're, maybe let's say you're not a real estate investor, right? Maybe you don't own real estate, but you run a property management company, or a small brokerage, right? And you have various expenses and overhead that they're there, whether you guys are increasing your profits or not. whether it's labor and other input costs, they're increasing double digits every single year. I see it here in my own brokerage business, is that the expenses are just up and to the right, regardless of market conditions. So to be able to diversify my cash holdings, right, into Bitcoin or some of these other products that we're going to be getting into that are built on top of Bitcoin that give you that extra lift, it's going to become a lot more important as we get further into this cycle and back half of this decade. The one thing you did mention there, Kenny, I want to touch on too is having the ability to be patient and selective on what you work on, right? I mean, that's a luxury that most players in the CRE space just don't have, right? Particularly the funds, the various syndicators, the big investment managers, they basically get a chunk of change, once a year, and however big that may be, a couple hundred million, $1 billion. And if those acquisition guys and fund managers don't use up those funds by a certain time, they lose it, right? And that means no bonuses. They're not making their bonus. So they're incentivized to go deploy that capital as fast as possible, regardless of where we are in the cycle, and regardless if the deal is a good deal or not. So that's a whole another kind of angle here of some of the challenges that are embedded in the real estate sector. Is there's a lot of bad deals that have really just been papered over and in many times inflated from a valuation perspective.
Yeah, no, I agree with everything you said there, and I think that's kind of one of the first low barrier. It's like the low hanging fruit. The first kind of thing you can start doing is just adding Bitcoin to your balance sheet, accept Bitcoin for payments, and then there's going to be a whole new world that opens up when we get into the collateral that Bitcoin can be used for, and pairing it with real estate. I mean, real estate has always been on the balance sheet, and Bitcoin's it's like real estate's little brother right now that's going to grow up and be taller and stronger than. So
Get
I
your
think
licks in while you can.
yeah, so like I think it's like they pair so nicely together, and like if you think of your Bitcoin on the balance sheet, if you think of it as another property, like hey, that's just another property. It's not cash flowing right now, but in the future it could cash flow. And that could be by diversifying into, preferred stocks or um like strategy that are backed by Bitcoin and um, pay dividends, or it could be that you accumulated so much Bitcoin that now you can borrow against your Bitcoin to go buy a property, and in that scenario, you become you become a better buyer in the market. You're a more powerful buyer because now you're a cash buyer. You're not relying on a finance contingency from the bank. You're not relying on the bank committing to this property. If you like the property, you can move fast. You can borrow against the Bitcoin. You can be a cash buyer, acquire the property super quickly, and your offer is going to be more competitive in the marketplace because everyone else. I mean, in self storage, there's a lot of cash buyers, but typically there's financing contingencies. So if you can move without a financing contingency, your offer could be less, and you could get picked over just because they're not worried if you're going to be able to close or not. Um,
Yep.
but the if you do adopt as a property owner, whether it's you know um, retail shopping, self storage, office space, whatever it is, if you adopt a Bitcoin standard and you start accumulating this Bitcoin, these are the options that are going to be available in the future. And if you don't start today, you're not going to be able to recognize these opportunities when they come, and things are going to move really quickly, and it's going to put you at a major disadvantage. So you're going to be competing against property owners and investors that are going to use Bitcoin as a tool to acquire real estate. They're going to put their Bitcoin to work, because right now it's like a race. It's a race to acquire as much Bitcoin as you can, and everyone's kind of like, we're going to figure out how we're going to use the Bitcoin as collateral once we get it. And so there's like this race to like stockpile it, and then once it's in their vault, they're going to be looking to put that Bitcoin to work. And I think, that next chapter is coming sooner than later.
How do we talk, like, how do we kind of let's lay out the different ways to buy Bitcoin for these real estate folks, right? Maybe they've dabbled in their brokerage account. They've recently gotten access to, some of these newer products, whether it's an ETF or a treasury company. Like, let's touch on that versus, going to a River or a Swan or a Gemini and buying actual Bitcoin. Like, what are the differences and the trade-offs there? And I can take one if you want, Kenny, or I can let you run with it.
Chris, you're using the example that all of their accounts are at Vanguard, so they just got access. Is that what you're saying?
Yes, exactly. All of a sudden, something showed up in the search bar that didn't last week.
Oh, that did go through. Okay. Yeah, to answer your question, I think, probably like the easiest way for an existing business is, if they already have something like Cash App that they're taking payments with, first check to see what payment software you're using. They may already have an option for you to accept Bitcoin and to buy Bitcoin. So that would be like the first thing. Like, what software are you using? Maybe you already have the ability to buy Bitcoin and you just didn't know it yet.
Through the Square platform or another platform that may have that enabled now. Yeah.
Yeah, I think a lot of them, have it. It's, PayPal, I don't know, Venmo, but like a lot of them have it. And then the next thing is like, well, are you able to take custody of that Bitcoin? Like, I think there's kind of levels to it, and the first stepping stone is like just meet you where you're at. Like, what software are you using now? If it's not available on any of the software that you're using, maybe go to like a Bitcoin only type of wallet, something like Strike, where there's not going to be like a million different distractions in your face, and you can just focus on Bitcoin. And just download a Bitcoin only wallet that allows you to buy, sell kind of Bitcoin, and just get your feet wet. Just buy $5 worth, buy $10 worth, 1,000, 10,000, whatever you're comfortable with.
A million.
A million. There you go.
Buy 21 million Bitcoin, and then this whole thing can be done. We can accelerate it a little bit.
There you go. I mean, I agree with all of that. That's awesome starting point for sure. What I'll say on it is, it very much depends on the entity structure, right? Kenny, individual real estate owner, is very different than the partnership with 30 different stakeholders, right? So there's definitely some consideration that comes with the entity structure, and that'll more often than not start to steer you in one direction or the other. If I am being my Bitcoin, have my Bitcoin purist hat on, I would say, don't buy the ETFs. You're losing. Yes, you'll get a little bit of exposure to the appreciation. It might be a little cleaner from a tax perspective, but you're not getting the full benefit of the bearer asset. Being able to self-custody the asset is incredibly powerful. It comes with a lot of responsibility. But it also gives you that flexibility and the optionality that we've been describing here the last couple episodes. Again, the 365 liquidity, the ability to act as your own bank. You're not asking for permission or waiting for, bank hours to click on. So that's what I'll say on that is, if you can buy spot Bitcoin, I understand there's some impediments for certain situations, which is fine. Work within the confines that you're located. And if that means an ETF, then so be it. Just keep that on your radar for the next deal or the next fund. If you're starting fresh with a new fund, make sure you structure the operating agreement and the various documents in a way that gives you the option to purchase Bitcoin or other equivalent assets, cash-like instruments, and even some of the preferred offerings that Strategy has out there. And then from there, you get to go and learn all about custody, which I'm sure we'll do an episode or a talk on that topic as well. But I don't want to overwhelm the real estate community here today in one
Well,
show.
that's like another interesting point because um, if you're going to do self custody, you have to have somewhere to store your seed phrase, right? Like you literally need a piece of real estate to store your seed phrase if you're going to take self custody. So I think that's another interesting intersection of Bitcoin and like you could have like what they call a brain wallet and memorize the password essentially in your head. But if you fall and hit your head, that's not going to be very good.
You got it right here, Kenny. Don't worry about it.
And so I think that goes like I see, I know that our audience here is like real estate guys and girls, but a lot of the hardcore Bitcoiners, talk about Bitcoin only, and you know, selling their real estate assets for Bitcoin. But like, I couldn't imagine like not having a backup that you have to literally store on a piece of real estate somewhere. And whether you diversify that and you do like a multi-sig and you spread it out geographically, you're still using physical space and land and real estate and buildings to protect that Bitcoin. So real estate is like a security portion of your Bitcoin. It's like the moat between you and your Bitcoin. I don't know.
Yeah, I mean, again, it's there's considerations on everybody's situation is different. So and there's different considerations for it, right? If we're talking about if Tim owns a property by himself, it's just an Airbnb rental, a single signature cold wallet probably is sufficient, right? If the three of us own something together and it's just the three of us, we all understand Bitcoin, we understand the real estate, all of that, then maybe a 2 of 3 multi-sig or a 3 of 5 multi-sig through an Unchained Capital or a Casa would be appropriate. If you're a syndicator and you got 50 different LPs in a deal or managing a larger fund, maybe there's some regulation there. Multi-institution custody is probably where you want to start exploring, where you are not necessarily responsible for the key material and managing and just storing that. But the keys are split geographically amongst 3 different trusted institutions. So again, it just depends on your situation, and we're at a point where like this is stuff that gets the 3 of us excited, but these didn't exist in 2017, 2018, even 2020. So that was definitely a barrier to entry for the real estate community. And now in 2025, a lot of those frictions and risk have been addressed and ultimately removed to a large extent. Tim, I think I had cut you off there before we went into custody.
I was just saying I've got all the seed phrases right in here. It's there's no problem. Happy holidays to everybody, right? Be nice to
Yeah.
me.
There you go.
Yeah, we gotta
Uncle
we gotta
Tim,
get you a
nice to-
helmet. I'm gonna send you a helmet for Christmas.
Yeah. Helmets for Tim. Start a GoFundMe.
There you go.
Did we cover everything on the dashboard, Kenny?
I kind of went through it kind of quickly. We could go over, some of these charts here. So, Bitcoin yield represents you have it represents the percentage gain in Bitcoin terms that you're accumulating month over month. So we can see. I think there's something going on here. I might have to refresh it, but I don't want to screw anything up here. Should I refresh it and we all cross our fingers and hope it goes okay, or we can just continue here? Here, let me refresh it while there. Okay. Okay. Yeah, it's working better now. If you want to share it, Tim. So you can see our first purchase in July was, we've been dollar cost averaging 10,000 a month, or a week, sorry, for 20 weeks now. And the first purchase netted us 8 million Satoshis, which is 8% of a Bitcoin. So 1 million Satoshi, there's 100 million Satoshis in a Bitcoin. This could get a little confusing. But you can see we started at the end of July, so we only had one purchase in July. And then in August, we accumulated 34 million Satoshis, so 34% of a Bitcoin. And you can see that it's been a little all over the place because Bitcoin is a little volatile, but this allows us to dollar cost average. And had we did a lump sum in the beginning, we would have netted a lot less. Not that we had that option because we're using our free cash flow, but this lets us evaluate things over quarter by quarter, month over month. We can look at it in a line graph too. So these are the kind of metrics that we're looking at, and this one is in percentage terms, so you can see that it kind of will trend down because the amount that you need to purchase to maintain those yields, you would have to be purchasing more, and we're using a fixed amount on the weekly reoccurring buys. But the interesting part here is that October and November are very close, and that's because the price had gone down in November, and we'll see where we end up for December. We have a few more weeks, but we're kind of almost at a place where we've bottomed out, and it's going to be really neat to see how that affects our acquisition rate. Where
Kenny,
I think
can
I
I ask
have
you a
a
question?
tab over here. Sure.
So your US dollar purchase per week is how much?
$10,000.
Okay.
So we've spent $200,000 over 20 weeks purchasing Bitcoin, and we have an average cost here of 108,289, and this is good.
Where I'm going with this, so you're basically DCing 40 grand a month from your free cash flow into Bitcoin. Explain how you arrived at that dollar amount. I've gotten this question a lot online is, how do I determine that percentage allocation, right? And the way I've always explained it to them is, first off, calculate your NOI, your free cash flow, and then from there you need to quantify your operational needs over, call it a 12-month period, right? That's for US dollars. That's for immediate needs. What's left over, 40%, 30%, whatever that is. What's left over is a candidate. Doesn't necessarily all have to go into Bitcoin, but that chunk is what is eligible to be allocated into Bitcoin.
Yeah, coming up with your, the percentage that you want to allocate that, is going to vary, dependent on your, where you sit with your Bitcoin knowledge and just your business. They're going to know their business. We've decided that we're going to put 100% of our free cash flow into Bitcoin, and if we are in a bind, we can tap credit. We have ways that we can get money. We have a small U.S. dollar treasury that we keep, for our, or like a couple months worth of operating expenses there. But we're like confident in Bitcoin, and just it's math to us, and so we're 100% allocated with our free cash flow. And if it was an emergency, right now you can see we're down 14%. It would have been higher if we. I think the first purchase we had was you can see on July 29th, it was 118,000. So we were able to dollar cost average down to 108, but we could sell Bitcoin right now at a slight loss and cover any expense. It's not like we bought a new piece of land where like now it's occurring, like more expenses are incurring, like a real estate tax and whether you have a mortgage or utilities, and it's not like we're stabilizing another property. Like the value is still there, the store value.
Tim, I probably
So
shouldn't have asked a triple maxi that question. But no, thank you for sharing that. That's really insightful.
Triple, almost quadruple maxi, maybe.
Yep.
We'll have to go back to the definitions.
So, but I guess for anyone listening out there or wondering how to determine your allocation, that's how I would start. Is quantify your operational needs, and whatever over a given period of time, depending on your situation, your market, your asset type, and make sure you have that reserve, whether it's 6 months, 9 months, 12 months, whatever's left over. That portion is what is eligible for BTC diversification. So you don't have to be a triple maxi like Kenny or I and go 100%. 10% is great. 1% is great. Just get off zero is the overarching point here. And when you do that too, by the way, you're another the follow-up question or follow-up pushback I get online is the volatility comment, right? And I mean, for the three of us, we've been around long enough where your volatility is less of an issue. You become comfortable with it, and I don't want to say numb, but for lack of a better term, you do. So the vol when you are conservative with your allocation to this reserve asset, the volatility becomes a moot point, right? You're not allocating 100%. You're not over 100%, God forbid. So you have the US dollar reserves to cover those short-term needs. And if there is some kind of 20, 30, 40% pullback in Bitcoin, you're going to have the US dollar reserves to allow the market to find its bottom and start to restabilize and ultimately trend back up. So the volatility comment or concern is becoming less and less as this adoption cycle grows.
yeah, the one thing I'll say is from like you have to think of like when you buy Bitcoin, you got to think that you're going to hold it for a minimum of 4 years. So you're buying digital property in a sense, right? I know that's one of the ways to describe Bitcoin. And So when you buy a new property, you have that lease up period. I kind of talked about this on our call Monday, but you have that lease up period where your asset's not performing. You're waiting to, for a tenant, or you might have to fix up the building, or you might have to do something before cash flow starts coming in. So, you know, you're hoping that like that you don't have to go dip into that Bitcoin because you want to let it mature. You want to let it, appreciate. But in worst case scenarios, it's there if you need it. And um, the that's kind of the unique value prop, is where if you buy a new property and you're in a cash crunch because your other property had like a roof leak or something, and you need to repair the roof, or the HVAC units went out and you got to go repair the units, or the parking lot it's time to repave the parking lot, the big ticket items that maybe aren't covered through triple net leases, whether and some landlords are going to cover some expenses. And so um, if you don't have if you just bought a new piece of property and it's not Bitcoin, you're not going to be able to liquidate that property. You're not going to want to go out and call your broker, or list it yourself and sell the property to be able to grab the cash to cover the the issue here, where you can take a slight loss on the Bitcoin and cover any expense. So it's got that versatility, but it should be looked at as a longer term investment. And 4 years is about what real estate takes to really start, cash flowing, if you're going to develop it from dirt. Depending on the size building, I mean, I'm sure skyscrapers could take a lot longer, but self-storage, retail shopping centers, it's going to be around 4 years before you stabilize.
Just out of curiosity, Kenny, what is the average time on market for a self-storage facility to sell?
I mean, self-storage is one of the top performing. I think it was for a while. I think it kind of. I don't think it's the top performing the past 2 years, but it's in the top, categories of commercial real estate. And
Hmm.
there are so many private equity firms and REITs that are aggressively buying these facilities. They don't really go on market. It's offline deals, and it's a very competitive bidding process. There's a three-pack of storage facilities in our area in Rhode Island that recently were listed, and I spoke with the broker there, and he said every storage, like every national storage company, is placing a bid on that right now, and it's extremely competitive. So they don't really they don't even really make it online. I mean, I'm
Yeah.
sure there's some that aren't institutional grade, that do show up on some of these platforms, but they wouldn't be an institutional quality facility.
We
No,
have
that's perfect. That was what I was asking the question because I mean I deal largely in office properties, and office properties right now are sitting on the market for it's an average of 9.8 months to sell an office building, 50,000 feet or less, and 50,000 square feet or less. From a size perspective, that's going to be off the institutional radar, meaning that the buyers are your businesses, owner operators, smaller investors, local guys. It's not going to be your institutions and REITs acquiring something like that. So to your point, right, if you find yourself in a jam and you need to liquidate the real estate, I mean you better have enough buffer to hold on and keep the property maintained for 9+ months. Not to mention all the transaction costs that come with that. So that's again another example of where having this Bitcoin reserve comes in handy. And the same is across. It's the same across all these property types. It might not be 9.8 months, but retail is going to have its own dynamics, industrial its own dynamics, and same with multifamily. So again, it's very specific to your market and your property type. So you're going to know your property type better than most people. So make sure you come to Bitcoin and think about your Bitcoin strategy through that lens specifically. Don't take our strategies or our words as gospel, because there's too many nuances that come along with these properties.
I'm checking the comments. We have a comment, and feel free to comment. We're going to be doing these probably on a weekly or semi-weekly basis, these live streams. We have a comment from Brazil. Omar says, I am finding a way to tokenize my real estate and turn it into a RWA, real world asset. So that's a whole other topic we could discuss at some point. Very briefly, when we had the dashboard up, what caught my eye is you see the $200,000 number, then you see the 170,000. Literally, you saw it in real time when it was on the screen go to 171,000 as far as the gain or loss. And a few thoughts came to mind. One, someone might say, "Oh, so you lost $29,000 unrealized loss?" It's like, well, that speaks to the hold it for at least 4 or 5 or 10 years. But what happens, to Kenny's point, when you take a chunk of money and you put it into a deal that's not performing and beating the hurdle rate of Bitcoin, which is arguably 30 to 50% a year? How much money are you going to lose on that over 4 or 5 or 10 years? and first of all, you can't really buy $170,000 or $200,000 worth of real estate from a commercial industrial perspective in most areas. Correct me if I'm wrong, because I'm not the real estate guy here.
That's correct.
Even if you could, who's going to give you a line of credit, an LOC, or any sort of loan against that small of an amount? And if they do, what are the fees that are going to be around that sort of a transaction? So you could sell high basis Bitcoin and you're not really taking that much of a gain or a loss. But there's just so much to dive into with all of this. And that's why I think I can speak for all of us. We're excited to do these podcasts, the live streams, and some X spaces as well on at least a few times a month.
Yeah, the real world assets are something that I'm still kind of unsure about. I've been kind of following it a little bit. I don't think it's quite ready, but it's something to consider. I think that this has been talked about for a decade. I don't think we've actually seen anything, but now with these institutional players that can get it cross compatible on existing like legacy exchanges. Like if you can tokenize your real estate and then it can become for sale on Robinhood, I mean, that would unlock, that would help a lot of small businesses unlock capital. Because the main disadvantage that the smaller real estate players have compared to the larger REITs is access to capital markets. And so I think that in a way would level the playing field, but it has to be done right. And I don't know how, if that's something that happens next year or in 5 years, but I'll be watching it in the background as it comes to fruition. But it's definitely interesting. The one thing I fear is I'm a Bitcoin only kind of guy. I learned the hard way in 2017 when all these alternative currencies came online. When I first got involved, Bitcoin was the only one, and then we've seen millions of these tokens come out. So that always, I kind of remember the ass whipping I took, back in 2017, 2018, and I'm very hesitant to do anything there. But I will keep an eye on it just to see how it goes.
Yeah. I tend to agree with Kenny on this. I mean, good on you, Omar, for exploring that. There's definitely going to be some opportunity in that space down the line. When I'm asked about the tokenization topic, the first thing I come back with is, what are you tokenizing, right? What are you getting a slice of, right? If you're getting a slice of trophy real estate in downtown Manhattan, where Tim is sitting, that's one thing. But if you're getting a slice of, some 1960 construction garden style apartment building in the middle of nowhere, some tertiary market, right? That's something entirely different. And when you think about this tokenization model and being able to invest small sums of money, get this fractional ownership, right? The pool of capital you're tapping into are young kids, novice investors. They don't have the sophistication. They don't have the experience or the liquidity. And if that thing goes wrong, it goes really wrong, right? You don't have these big institutional managers tokenizing funds and playing back and forth just yet. I think there will come a day where that is happening, but I still think we're a long way off. So first question is, what are you tokenizing? Understand the asset, understand that the market it's in. Is it a good investment? If you could write a check for the entire thing yourself, would you want to buy that thing? Would you want to be managing it? Would you want to be responsible for leasing and refining just everything that comes with ownership? If the answer is no, or even maybe think about looking at other opportunities. So, and to Kenny's point, kind of bringing this full circle, I'm 100% Bitcoin as well. I'm a Bitcoin maxi, and I would say if you don't your starting point is Bitcoin, right? Bitcoin is what's going to transform the real estate markets. It's going to transform economies and business models. That is the starting point. Once you get that, then you can build up from there and go crazy with all the other areas of innovation and opportunity and risk. So that's my 2 cents on that one.
Awesome. Well, we are over time, so I want to be respectful of everybody's schedules. Thanks everybody for tuning in to the first ever live stream for the Real Estate Standard podcast. And we'll be doing this on a weekly basis. We may take a little bit of a break for the holidays, but we'll be consistent, and we will see everyone on the World Wide Web. Please comment below if you have questions, comments, want to get in touch. Chris has his handle there if you want to reach out to him or give him a follow on X. And we will see everyone at the next X Spaces. And next week we'll have episode 2 of the Real Estate Standard podcast being published. And thanks everybody for listening and watching, and everybody have a great night. Thanks, Kenny. Thanks, Chris, for your time.
Thanks,
Thanks,
Tim.
Tim.